Welcome back everyone. This is a brief update about the gold market. Gold's price seemed to stabilize nearby $1,700 in the later sessions as the economic risks around the globe seem imminent. Even though no significant developments have been announced in the past days, it seems like gold traders seem unwilling to change their views unless something unexpected is announced. However, this report aims to overview some of the most important aspects related to gold's price at the moment and provide a conclusion at the end with our own personal opinion. Starting first with the most considerable instrument related to gold's price, which is the US dollar. The greenback moved higher since our last week report as further demand over the most popular currency of the world continues to increase. Even after the latest US employment report released during the past Friday, indicating unemployment had risen to 14.7% in April, the US dollar kept getting stronger. Some analysts support the opinion that the US dollar could continue to move higher as negative financial releases reel in. A strengthening dollar usually makes gold more expensive for investors and traders and could invite the bears in. However, looking at gold's price action during the past week, one could view a sideways motion. We must note that gold's price holding up does not come as a surprise to us, neither should be considered a weekly trend. In our opinion, gold traders have a significant amount of doubt and uncertainty over the global economy's performance in the future months. Until the present moment, central banks and governments have spent an amount nearby $15 trillion on stimulus plans. The stimuluses were aimed at reviving the economies after normal operations and services were postponed for a time frame nearby 2 to 3 months worldwide. It is very difficult to estimate the total damage the global economy has suffered by the coronavirus outbreak for a number of reasons. First, the infection rates are seemingly increasing on a global level. Some countries like the US and lately Russia are still in the process of trying to control the outbreak. Thus, the negative impact on their economies is ongoing. Some believe that the pandemic could follow the most infected countries into the summer months. If the outbreak continues, then economic activity will continue to be battered in the next months. Also, going back to monetary policy and stimulus plans, we do not see the packages ending for the time being. The Fed stated that it is willing to continue its monetary policy actions and continue to fund the economy, and this could be cleared further during the Fed Chairman's Jay Powell's speech on the 13th of May in the American session. Also, another factor that creates some uncertainty is if the stimulus and monetary policy action taken by central banks and governments are suitable to revive the economy. We must note that monetary policy was not designed to fight back a virus pandemic. On a separate note, very recently Germany's court has asked Bundesbank to further ask the ECB to clarify on the proportionality of its quantitative easing program. Even though this matter has not been cleared yet, it seems that the Germans would like evidence that the ECB plans are directed correctly. As a conclusion, all the pre-mentioned add up to the idea that the global economy has not made the step forward to reclaim the lost ground from the past months, and that it may need more months to be able to reach a comfortable altitude. As a closure, some financial releases coming up in the next days from the US could move gold's price, as we would like traders to be aware of them. On the 14th of May, we received the initial jobless claims figure for the previous week, while on the 15th, we get the retail sales and the industrial production data for April, along with the University of Michigan preliminary figures for May. These releases have created volatility for gold's price previously, and we would advise caution when engaging the market. Now moving to the technical analysis in gold's 1-hour chart. Please note, since our last report, the precious metal has moved in a sideways motion between our R2 1721.70 resistance level and our S2 1684.60 support level. Also note gold's appetite for large movements during short time frames. Starting with a possible move lower, the precious metal could initially approach the S1 1695.60 that was tested many times on the 11th of May and even today in the Asian market. Lower we have noted the S2 1684.60 that was tested on the 6th and 7th of May, while in the ultimate bearish scenario we see the S3 1674.40 as a possible stop point, which was last seen on the 1st of May. In the opposite direction, and if a buying momentum prevails, gold's price could move towards the R1 1710, which was last tested on the 11th of May. Higher, we have the R2 1721.70 that was last seen on the 8th of May. We have also noted the R3 1733 as a possible level in a strong bullish trend, which was last seen on the 24th of April, making it the only level not seen during May. Finally, the RSI indicator below our chart has been rising and could be aiming for the 70 level barrier, possibly displaying a bullish trend. With the technical analysis, we have reached the end of our report. We hope that you may have found something useful in this report which you can use for your trading. From all of us here at IronFX, best wishes for solid trading.